Hey guys, Jason Perry again. Hey, wanted to talk to you about a question that I actually get relatively often, and it's just something that I thought would bring up right now. Has to do with how can you buy a home, meaning what are the down payment requirements? Do you need 20% down? Do you need 10% down? If your credit is X, does that mean you need to put Y down? Those sort of things. So basically, in a nutshell, there's a whole slew of programs that are out there. To break them down in the broadest sense, you have two groups. You have government insured and you have non-government insured. The government-insured programs are things like the USDA Rural Development, the VA loans, the Veterans Administration loans, FHA, the Federal Housing Administration loans, those sort of things. And then you have non-government insured, which are basically things like conventional or jumbo or non-conventional loans, which are a little bit funkier. On the government-insured loans, basically it's typically eligible for folks that are first-time home buyers or not. And actually, even to add into that, you have your programs like your state programs, like your New Hampshire Housing, your Mass Housing, your Maine State Housing. What these programs will let you do, first and foremost, VA loans are programs that you can actually buy a home with zero down. So if you're a vet, zero down, fantastic, great program, low interest rates. All the government loans typically have low interest rates. Now to get into the USDA Rural Development, also a zero down program. However, it's geographically restricted. You can only buy in particular geographic areas that are quote-unquote rural, so lower populated areas. It's pretty broad, but it is lower populated areas. Next, you have your New Hampshire Housing, Mass State Housing, Maine State Housing. These are programs that you have also lower down payment requirements, and most of them are typically matched up with the next type, which is an FHA loan. FHA is a 3.5% down payment loan. So usually when you match your New Hampshire State, Mass State, Maine States, typically what you'll do is you'll get a grant from those programs and you'll have to put a percentage down, say 1% down, for example, with New Hampshire Housing. But those are basically your government programs. Once you get outside of your government-insured programs and you get into your conventionals, right now, typically you're looking at a 5% down minimum down payment. Conventionals are typically a little more expensive than the government because the governments are subsidized and insured. So basically, in a broad sense, that's basically what you're looking at. You have your zero-down programs, which are your VA, your USDA. One, you need to be a vet. One, you don't need to be a vet, but you need to be in a rural area. These programs typically also have income requirements, not your VA, but your USDA. Another income requirement program, which is also low down payment, is New Hampshire Housing, which is typically a 1% down. And again, Mass and Maine are very similar. And then next you have your FHA loan, which is a 3.5% down payment with no income restrictions. No geographic restrictions, no income restrictions, and you can actually have your entire down payment given to you as a gift from a direct family member. So just a little bit of an insight on the programs that are out there. Again, need anything, have any questions, feel free to reach out to me, jason@lendwithjason.com, or you can call my cell, 603-325-2033. Hope you're having a great day.